my good people. Today we're going to be doing debentures. We're going to be generalizing debentures, and also I'm going to show you how the percentage that they give you in the question, where it works and where it's useful. So you don't just go around multiplying everything and then you end up with the wrong amount. So I just came up with a question off by heart, and if we get decimals, we'll get decimals, but I doubt, because I try to use figures that are like fixed. And yeah, so let's get into the video. So debentures are like, it's sort of a loan that you give off to the public in order to finance your company and so on. So they would say that you generalize the debenture. So they'd say they issued 250 debentures at 10 rand with a coupon value of 9% to the public, right? So when you're generalizing this, and they're saying you should generalize these debentures, the issuing of these debentures, what you're gonna start by doing is you're obviously gonna have bank and your debentures, because money is coming into the business, right? So yeah, so let's start. All right, so let's just say for starters, they gave us the date of the 1st of January 2012, and they're saying they issued 250 debentures at 10 rands with a coupon value of 9% to the public. So since I did say that these debentures are current liabilities that we seek help from the public in order to fund our business, they're issued like shares. Debentures are similar to shares, but they're not necessarily shares, because you owe the public and you have to pay them back at a later stage. So they are actually a liability. So obviously, because money is gonna come in when you issue the debentures, you're obviously going to debit your bank when you receive the money for the debentures, and you're going to credit your debentures, which is a current liability. And this is statement of financial position, and this will be statement of financial position as well. And then you'll say proceeds from issuing debentures. And then how do you calculate the amount that you record here? You're going to say 250,000 and you multiply it with the 10 rands. That should give you 2500. Let me confirm, because I did that off by heart, but the number of zeros are supposed to be 5. Yes, that's correct. So you're gonna have 2,500,000, 2,500,000, and 2,500,000. Right. Now you ask yourself, where does the 9% work? So when they're saying they're paying back, obviously the public, you'll have to reverse it and you'll have 250 and paying it back if they're paying it once off. But yeah, so where does the 9% work? 9% is the interest on these debentures. So it works in your interest expense financial cost note. So in your financial cost note, you'll be writing all the interests that you are paying throughout the financial year, right? Finance cost is the same as interest expense. So basically, this finance cost has a note itself, but this note doesn't have much to it. What it's saying is you add all the expenses that come with loans, that come with current, that come with liabilities, right? So you're going to have your interest on your mortgage bond, you're going to have interest on your debentures added to that amount. So this 9% works there. So obviously you're gonna have your finance cost note, right? And then on your finance cost note, you're going to say interest on debentures. And you're gonna say this amount, or you could take this whole thing and write 250 multiply by 10. But since I just wanna save time, I could just say 2500,000 multiply by 9 over 100 to get the amount at which these debentures are worth. That should give you 225,123, and then you're gonna have your 225,123 under your note of finance cost. This note of finance cost falls under your notes um module, where they are notes going to statement of financial position, statement of profit and loss, and so forth and so forth. And this one particularly goes to your statement of profit and loss. So yeah, this 9% is used when you're calculating the interest. So you should know that the 9% or the percentage in the question is for interest, right? So percentage is equals to the interest, and your interest goes to your statement of profit or loss, right? So yeah, I guess that's all for debentures. For so let me close the video and do a bit of a revision and recap of what we went through, right? They're going to give you the number of debentures similar as shares, but not necessarily, because they are liabilities. So they're going to give you the number of debentures issued. They're going to give you the coupon value, which is the same thing as the share issue price. So this 10 rands is the value of the number of debentures each. So you're going to take the 10 rands and you multiply it by the number of debentures, and you're going to get the value of the debentures needed in the question. So then you're going to debit your bank and credit your debenture. Why we debiting bank? Because we're receiving money. And why we credited debenture? Because debenture is a liability, and our liabilities are increasing, because at the end of the day we're going to have to pay back this amount. On top of that, we're going to be supposed to pay also the interest on these debentures. So we're going to say proceeds of issuing debentures, and you're going to say 250,000 multiplied by 10, you get your amount. And then where do we use the percentage? The percentage given is the interest on the debentures. So you take your percentage that you're given and you multiply it by the value of the debentures, not the number of debentures, but the value of the debentures. And you're going to multiply it with the value of the debentures and get the interest on the debentures. That goes to your note of finance cost, which later goes to your statement of profit and loss. And yeah, so basically it goes to your statement of profit and loss, but later and furthermore it may go to your statement of changes. No, not statement of changes, statement of cash flow, right? Under you know that your cash flow statement has interest expense. The same interest expense is the same one of finance cost. So later it will go to your statement of cash flow, because you pay this money, you actually pay it out. So if you're supposed to calculate your interest expense, which I doubt, it's probably going to be given. If you're given your different interests in your cash flow and they give them singular form, they give you interest on mortgage bond, they give you interest on debentures, they separate them, trying to confuse you. You pick all of them. The interest that you're paying out to other companies or other individuals, you add them and you have your full interest expense, which is your finance cost. So I hope this video helps people that needed assistance with debentures. I did get requests asking for this in particular, and I hope it helps you out. Shout out to everyone who's texting me and telling me Guti they need assistance with this particular part of the syllabus, with this module. Shout out to you. Keep on reaching out to me so I can assist where I can. I believe that we can make it together as a whole, and some people are assisting me with other modules and I'm assisting them with accounting. Big ups to you. And yeah, keep on texting me, keep on dropping down your questions in the description box. And yeah, those that cannot get a hold of me via my contact number, use the description box at your disposal. I'll ensure that I answer it as soon as I see it. And yeah, hoping to see you in the next video. If you have any questions, any assistance, if you need any help, doesn't matter the time of the day, because yeah, whatever time when I'm on my phone, I'll definitely respond. Ask so we can ace this exam. Or from me to you, it's bye and see you in the next video. Ciao.